Okay, everybody, here we go. It's me, Gregory Mannarino. Friday, November 3rd, 2023, and this is my pre-market report. People, let's start off with this. You can only imagine what we are going to see here moving forward with regard to the explosion of global debt, which they are going to force upon every citizen of this world right now. This is just the beginning. They're not going to stop inflating. Central banks have the world by the throat. You know this already, but they haven't even begun to squeeze yet. And I think, honestly, the worst is yet to come, period, the end. It should be pretty obvious. Central banks are, again, hell-bent, none more so than the Fed, to keep rates suppressed. And by doing this, all they're doing is exacerbating the problem. We have a liquidity problem on an unprecedented scale around the world. Cash is drying up, and you all know this. We have covered it repeatedly as of late. So what are central banks going to do? Either number one, they can allow the system to lock up, or number two, they can inflate beyond your wildest dreams. And they're going to inflate beyond your wildest dreams because that's the goal here of central banks. Again, understand what you're seeing here. The current system is dying. The current system is dying. To foster the illusion that it's still working, they must pump, and then pump some more. This is fake. It's a farce. It's an illusion. It's not real. This whole world system now, this debt-based thing that they forced upon us is nothing but an illusion. If central banks were not in here pumping the world with more debt than you can ever possibly believe, and that's what they're going to do, and they're going to expand wars and create reasons out of thin air to pull more cash into the now, where would we be? I can tell you it would be pretty badly off, but it would be nothing compared to what's eventually going to happen here. We have hit a moment of maximum saturation, but they're still pumping. And this issue with inflation, people, look, this has been a lie since day one, and you know it. They have tricked the people into believing, number one, it was temporary, it was transitory, it was eventually going to miraculously go away. No, this is a joke, and the joke is on us. All they've done is cut off the availability of credit to small businesses. You know that, and the consumer is getting crushed. Speaking of the consumer getting crushed here, before we even talk about the market, so we got another warning from big retail. You know, we're talking about the Targets and the Walmarts. They're going to be laying off thousands of people moving forward. Also, we got a warning from major shippers around the world. They're going to be laying people off too. Because again, the world economy is done and it's finished, but you're not allowed to know that. We're cratering at the fastest pace that we've ever seen. It's unbelievable, but what else would you expect? Let me say this too. Here in the United States, we just got a big clue. If you recall, before the Fed announcement, I said we're going to get a big clue as to what the Fed is thinking coming this past Wednesday here with regard to their announcement on monetary policy. So, again, the method here is very, very simple. They already have the consumer where they want them, a boot on their throat. Inflation is going to continue to rise. The pressure on the consumer is not going to let up. We are in the middle or in the early stages of this creation of a neo-feudal system, extreme haves, extreme have-nots, as we have covered for over 10 years. And it's really manifesting itself now. But what they're going to do is anything that they have to keep the market propped up, at least through the presidential selection cycle. After the presidential selection cycle, notice the words I'm using here, we'll see what they decide to pull off. But for now, the illusion of the market is going to be kept real. I mean, look at the 10-year yield. This move is profound. And they were watching the line in the sand like you and me. We know where it was, 5% on that 10-year yield. They've managed to very successfully push that down. The dollar is weaker yet again. Do you realize this entire week, just as you and I had called it, actually we called this over the weekend. We said, watch what's going to happen to the market this week, starting on Monday, after the comments that came out of President Trump's mouth. about funding the war and keeping it going, and the market wanted to hear that, honestly. And the market, again, I'm going to tell you, no matter how much you love Trump or hate him, the market wants Trump. Is the market going to get Trump? I guess we're going to see. President Trump is very, very good for the market. There's just no doubt about it. And the market generally gets what it wants. Let's see how this plays out moving forward here. Anyway, with that said, let's go over here to the market. 10-year yield lower, as I said. Dollar lower. Imagine my shock here. Risk in the market is dropping. We are on MMRI sub 300 watch. If we see the MMRI drop below 300, this market's going to really love that. I can tell you that right now. MMRI, free to everybody. Link in the description of this video as a measure of risk here. If we go below 300, we'll be out of the red zone here. And the market's going to really get off on that. I could pretty much guarantee that. Look, I've been telling people I've been long this market for I can't tell you how long I've been long this market. I'm going to be adding to my long positions. I think that's where we need to be. The market is going higher, especially, again, in the face of what's going on. Suppressed yields, which is not going to stop. That means there's no price discovery mechanism at all behind a single asset. But this does not mean that the stock market's not going to go higher, because it is. Okay, earnings don't matter. Forward guidance don't matter. Nothing matters anymore. It's about easy money. It's about suppressed rates. And that's what the market wants to hear. It should be pretty obvious. That gives you and I opportunities here, okay? You ask for solutions, a lot of you. Okay, get long the market. That's number one. Number two, bet against the debt. Become your own central bank. Hold hard assets, gold, more specifically physical silver. Get some cryptocurrencies in your portfolio as well. Get diversified. Gain exposure to commodities in aggregate. Period. There's a lot of ways to do this. There's multiple ETFs or exchange traded funds that will give you exposure to commodities. I posted, I don't know, at least 3 outlines of exchange traded funds which will give you to exposure to commodities in my free newsletter. Link in the description of this video. So subscribe to that and go look through the posts. You'll see what I'm talking about. I got your back. I won't let you down. But you got to take action. And again, when I'm out here talking to you, do your own research on this stuff. Always do your own research. Does what I'm saying make sense to you? Are you seeing what I'm seeing, or are you seeing something totally different? Okay, it is possible that you could see something totally different. It doesn't necessarily mean you're wrong. I'm telling you my perspective, and you're allowed to have your own. You understand? I think most of you get it. Anyway, again, going back to this market, you got cryptocurrencies under pressure right now. You got gold and silver mixed right now. Silver's under some pressure, gold slightly higher. Again, as I am doing this, trading didn't start for about an hour and 15 minutes. Crude oil getting bit higher as I am doing this video blog as well. And we're going to see where this whole thing goes moving forward. But again, what's the takeaway from this video? The takeaway from this video is you can expect much more fakery in this market. More easy money, meaning rates are going to be kept suppressed. Suppressed rates, people, if you're new here, pay attention to what I'm going to tell you. When the Federal Reserve, in this case, keeps rates suppressed, as they are doing, not allowing the market to decide fair value for debt, all it does is open up a doorway for cash to make its way into the stock market. Regardless of anything else, regardless of thousands of people that are going to be laid off here by big retail, regardless of the shipping companies also going to lay people off, regardless of the consumer getting crushed to death, okay, it doesn't matter. It's easy money. Suppressed rates opens that doorway for cash to make its way into the stock market. Should be very simple. Should be very, very simple for people to understand. At least I hope so, all right? Anyway, people, look, we got each other's back always, and I will never let you down. You know that. Keep your eyes on the MMRI, all right? We are on sub 300 watch. We break below 300, like I said, this market is going to get, it's going to be very happy about that, although it's just going to make this whole situation worse. The mechanism here. across the board is just making everything monumentally worse. The distortions in the market, the worldwide global debt hyper bubble, which is a ticking time bomb. Much, much worse here. But people are going to look at their 401ks and they're going to love it. Up until the moment where it all disappears. Then they're going to go, what happened? When I was so rich on paper. Oh, yeah. It's always the same story. And these same people always are the same ones who go crying, wondering what happened. Oh, nobody told us what was going on. Nobody warned us. Really? How about that's totally not true. All right, people, look, love you a lot. I mean that from the heart. I will see all of you 4:05 p.m. Eastern Daylight Time for the live stream. I got quite a busy day today, but I will make it for you. And I have some questions for me. Ponder what I've spoken about. If you got something out of this video, please hit those thumbs up. They're required. All right, honestly, give this video a thumbs up. Get it out there. Let the algorithms pick it up. Comment. I want to hear from you. All right? Anyway, that's it, people. All right? See you later.